We can start, Aman.
Sure, sir. A very good monsoon evening to everyone. Everyone who has joined us today. Uh, Thank you for joining for the session. Also, basically, we'll first like to clarify that last week's session will be rescheduled, and the rescheduled date would be announced in the due course, which we will intimate via email and via our WhatsApp channel. Okay, so now coming back to today's session, as we all know, today's session we are going to discuss about outward documentation. Outward documentation would just not mean that we need to collect and store paperwork or do the compliance as it is, but it also implies that the paperwork that is done, that is relevant, that should be accurate, that should capture the correct required details, serve the purpose of that specific document, and last but not the least, it should be as per the legal requirements set in the law. So today what we are going to discuss is we will try and cover all the possible documentations which are prescribed in the GST law, which are associated with my GST outward supplies. And what we'll also discuss simultaneously is that the applicability, what provisions govern them, what is the special care one needs to take, also what is the consequence of non-compliances, what are the exceptions, certain relaxations for certain set of individuals, certain variations, all of that. And lastly, we'll also cover e-invoice and e-way bill applicability as well. Without wasting much on this, what I'll do is to begin with, I would first like to discuss what is the importance of documentation. Why documentation is important? Obviously, the first answer that would come to your mind would basically mean to say that, okay, the law prescribes, and to avoid penalties and fines, you are complying with the documentation. But there are certain intangible aspects which are associated with documentation, and those intangible aspects is what I want to highlight today. The first one is that of outlook of the management. When an organization ensures that the documentation is appropriate, it is accurate, the transactions are recorded correctly, it signifies the level of importance that is associated to documentation in that particular organization. Also, when the documentation reaches third parties, even they understand that, okay, in this organization, documentation is taken quite seriously. So for example, if you receive an invoice where the invoice font is way too small, or the color scheme is not readable, or say a lot of information is loaded which is not relevant, not required, or finding the relevant information is difficult. So in all of those cases, don't you immediately feel that, oh, whether the management is serious about the documentation or no? So that is the impact of good documentation. Next aspect that I want to discuss is the discipline. Attention to documentation reflects how much discipline is followed in the organization. It reflects how much importance is associated to accurately capture the relevant, accurate details. So, for example, at the initial stages of GST, everybody would have experienced some of the other case wherein the invoice documents that would have been shared, the GSTIN would be missing, address would be incorrect, or say, for example, the GSTIN is yours, but the address is not yours, or your name is not mentioned. In all of those cases, don't we all feel that, okay, whether the opposite organization is actually serious, or whether you begin to actually question their discipline, and eventually you might actually have doubts about the genuinity of how much emphasis the supplier provides or gives to the documentation. The next advantage of documentation is that it leads to efficiency. So efficiency can be measured in terms of the amount of time saved. Say, for example, if 3-4 years down the line, certain information has to be retrieved or certain information has to be provided. The time that takes to retrieve those information would be much lesser if from the start appropriate documentation is correctly maintained. Similarly, in terms of financial efficiency, you can say when GST audit happens, that time on account of such documentation details, the organization would not have to face penalties or fines, right? So that type of efficiency we are talking. Or the other case also, say for example, you have an invoice wherein your GSTN is not correctly mentioned. As a result, that invoice is not appearing in the GSTR 2A 2B document. Amendment time is over. So now there is a commercial dispute because ITC is not eligible to be claimed. If the documentation was proper, this would not have occurred. As a result, there would not have been such financial loss which have to be borne by either of those parties, right? So efficiency is improved because of good documentation. The next aspect that I wanted to discuss is ease of compliance. So a good document would ideally capture not just the relevant details which are prescribed in the law, but it will also capture those additional fields or documents which will help in filing the returns or which will provide capture details which are required for your annual returns. So keeping the entire broader picture in the mind, having a good document will ensure that the compliances run smoothly in the long run, because it is very difficult to capture data once the transaction is over and some time has lapsed. So if at the time of documentation itself the relevant details are captured, it is much easier at a later stage. And last but not the least, perception of department. I think it has been everybody's experience, and including ours, wherein a good document or a very document which captures all relevant details, correct details, accurately captures the necessary details, are perceived to be much better law-abiding organization as compared to cases which do not maintain proper documentation. So how quickly you are able to submit the details that are required, how easily the details which are required are presented to the department, all of these also matter. So even when we go for audits, a good documentation policy followed by the organization generally does not attract unnecessary attention from unnecessary sources. With that done, next I would just like to highlight what is the broad agenda for today. So what we're going to try to cover is tax invoice along with its variation, debit notes, credit notes, bill of supply, delivery challan, receipt vouchers, refund vouchers, payment vouchers, tax invoice, revised tax invoice. And when I'm discussing all of these, I'll also be discussing which provisions which they are governed by, what is the reason for issuing, what are the conditions for issuing, who should issue, applicability, special care, special relaxations if there are provided, and we'll conclude with e-invoice and e-way bills. And simultaneously, I'll also be explaining the consequence of non-compliances after each segment. So let's move on to the first document, that is tax invoice. And slowly and steadily, I'll take up the different variations that are involved one by one. So the first case is the normal taxable supply. As we all know, for normal taxable supplies, you are expected to raise a tax invoice, which is governed by provisions in section 31 and rule 46. So every registered person who is providing a taxable supply of goods or services has to issue a tax invoice. And when they issue a tax invoice, the tax component has to be separately indicated in all the invoices. As a result of this, the recipient will be eligible to take ITC, which is reflected and which is paid by the supplier. The manner of issuance relating to tax invoice have been provided in Rule 48. And while discussing Rule 48, they have also provided for e-invoice enabling provisions in the Rule 48 itself. So in case of goods, you are expected to issue tax invoice in triplicate. One for the first original copy is for the recipient. The duplicate one is for the transporter. The triplicate copy is for the supplier themselves. In case of services, since there is no movement of goods, the transporter copy is not required. After discussing the basics of tax invoice, I am now going to cover what are the mandatory fields that are required in tax invoice. This slide of my mandatory field is now a template for all our future variations that we will discuss, because these are the basic details that are required. In each of the variations, there will be certain additions, certain exclusions, certain relaxation. So this is kind of the template which is set by the government, and depending on the variation, the requirement, certain invoices, certain mandatory fields would be either excluded or certain new fields will be added. So in case of tax invoice, as we all know, supplier's legal name, GST IN and address is required. The header should be tax invoice. The invoice number has to be serially numbered. It should be only alphabets and numerical. It should be unique for each financial year. So you can have serial number 1 in the financial year 21-22 and 22-23, but in the same financial year, you cannot have the same number that is repeating. Lastly, the special characters that are allowed in invoice numbers are only dash and forward bending slash. The next mandatory field is invoice date, from where the goods are being dispatched, if it is related to goods. Buyer's legal name, GST, and if they are registered. Buyer's address, recipient name and address if it is different from the buyer. So if the goods are going to somewhere else, the ship to details are also required to be mentioned. Place of supply is required only in case of interstate transactions. In case of intrastate transactions, it is obvious that it is C+S of the state in which the supplier himself is registered. Nextly, the next details that are required are rate of tax and the tax component, taxable value, the total value, invoice level details, description, quantity, HSN. As of now, as we all know, 6-digit HSN code is mandatory for all the invoices issued by taxable persons with turnover greater than 5 crores. The total value, each value of the invoice item, GST rate, amount, that needs to be mentioned. You also need to mention whether RCM is applicable, yes or no. We've seen in a lot of cases, the invoice issued just simply mention whether RCM is applicable, yes or no, without actually saying whether it is applicable, yes or no. So whether RCM is applicable, if it is applicable, then it should only mention yes. In case where RCM is not applicable, the invoice should say whether RCM is applicable, no. The last detail is that of signature and digital signature. So I've put a double asterisk, and because there is some relaxation with respect to signatures, and that is if it is an electronic invoice which is in compliance with IT Act. Here they are not talking about e-invoice. This is electronic invoice in compliance with IT Act. So what IT Act says is basically if the invoice, if the base data of the invoice is protected in a particular system and it is authenticated and it cannot be modified or altered, in those cases, that invoice is compliant with IT Act. So if that be the case, then signature or digital signature need not be required. When we come to e-invoice in the GST regime, I'll again discuss about this separately. Okay, now the first variation that we are going to discuss is that of tax invoice which are to be issued in case of export of goods or services or when supply is made to an SEZ unit. So the rules that are governing this supply are enshrined in Rule 46, proviso to Rule 46 and Section 31. In this case, what we need to specially take care is that your header of the invoice has, in case of exports, has to be either supply meant for exports on payment of integrated tax, or supply meant for export under letter of undertaking without payment of tax, depending on the nature of transaction. In case of SEZ supply, the header has to be supply to SEZ unit or developer for authorized operations on payment of integrated tax, or supply to SEZ unit or developer for authorized operations under letter of undertaking without payment of integrated tax. So if it is with payment, then separate header; without payment, separate header; export, separate header; SEZ supply, separate header. And all the other details that we mentioned in the tax invoice template, all those have to be compulsorily mentioned. The next case is a special case for B2C supply only, business to consumer supply only. So this is a special provision which is carved out by a proviso to Rule 46, which is applicable to all registered persons except multiplex theaters. So what does this special case or proviso to Rule 46 say is that in case of taxable supply made to B2CS customers, in those cases, obviously the recipient is unregistered. If the recipient does not demand a tax invoice, then the supplier, what he can do is he can issue one consolidated tax invoice for all the supplies that are made during the day and prepare one single tax invoice at the end of the day. So like, for example, you go to a printing and stationery store or a kirana store, wherein as a customer, I generally do not expect a tax invoice from them. Though the things I purchase, pen, eraser, scale, notebooks, those are taxable. However, I'm not going to be waiting there to get a tax invoice from that registered party. So in those cases, what the government has done is they have given this relaxation wherein they can issue one single tax invoice for the entire day, because the opposite person is a unregistered party and he does not need a tax invoice. Okay, I hope this is clear, and this has very limited applicability, as we can see, and generally not applicable for all our day-to-day business transactions. The next variation that I am going to discuss is that of input service distributor. In case of input service distributor, it is basically an entity which functions like a head office that does not have supply, that does not make supply of taxable services or goods or services, but it does receive input services. So for example, a large organization has head office in Mumbai. However, they have 5 to 6 factories from where the goods are manufactured and dispatched in 5 different states. So they don't actually supply from their head office, but a lot of the staff is sitting here. So in that case, what happens is there will be a lot of purchase of inputs and input services at this head office, but there will be no outward supply. So in those cases, what the government has given them an option is that this head office can opt for an ISD registration. However, a big caveat is that ISD cannot issue any invoice for supplies other than distribution of credit which has accumulated with itself, and such distribution of credit has to be made to the other branches having the same PAN number only. So very limited application for an ISD, but it is there in the law. So in this case, what the government is saying is that when you issue a tax invoice, when an ISD issues a tax invoice to its branches with same PAN only, what they can do is they can exclude dispatch and delivery details, they can exclude invoice level details, they can exclude the tax rate, taxable value, they can exclude whether RCM is applicable, yes or no clause. All that they need to mention is that the amount of credit that is being distributed to that specific recipient in each document. I hope it is clear. So it has limited applicability, but it is there in the law itself. The next variation that we are going to discuss is that of Rule 54 Subrule 2, which discusses about insurers, banks, financial institutions, including NBFCs. So when these entities provide a taxable supply, what the government has provided them with relaxation is that they can issue a single consolidated tax invoice for all their taxable supplies during the month to a particular recipient, and such a document need not be serially numbered. It will obviously have a number, but those numbers need not be serially numbered. It need not contain the address of the recipient on that document. It can be a physical invoice, it can be electronic invoice. However, all other documents, all other requirements of tax invoice have to be complied with in such a document that is issued. So I'm sure a lot of us would have experienced that during the initial days of GST, July, August, September, there was a lot of issue to claim credits of the banks, because for each charges, each bank charges that was levied, it was very difficult for the banks to issue a tax invoice. So as a result of the rigidity in their software, and to cope up with that lacuna, what the government has proposed is, in this Rule 54.2, they provide the banks, insurers, financial institutions with special option wherein they can issue a single tax invoice for a month for each recipient. So on the basis of such a document, the recipient can claim credit, and that I assume that is the detail which will be appearing in the GSTR 2B as well. I hope I'm clear up to here. So all other requirements of tax invoice have to be complied. Only certain mandatory fields are relaxed for the bankers. Next case that we are going to discuss is that of registered goods transport agents. So GTAs, as we all know, provide services in relation to transportation of goods by road. The provisions governing the tax invoice that is required to be issued by the GTAs, that is enshrined in Rule 54, Subrule 3. So in case the goods transport agent is registered under GST, his tax invoice, along with all the details which we had mentioned, it should also contain the following details, which are gross weight of the consignment, name of the consignor and consignee, registration number of the vehicle, MH01AX, etc., etc. The details of goods that are being transported, details of place of origin and destination, the GSTN of the person who is liable to pay tax if tax is payable under RCM. So as we all know, all of these details would easily be available with the GTA in his consignment note. What the GST law requires is that tax invoice should also bear all of these details when it is issued to the final customer. This is applicable only in case of registered goods transport agents, where the GTA who are not registered, obviously the GST law itself is not applicable, and their tax invoice would not bear the same details as that of registered GTAs. The next case is that of passenger transportation services. Rule 54, Subrule 4 is the relevant provision for such type of services. So basically your airlines, railways who provide passenger transportation services and which are taxable, they can issue the tax invoice, and such tax invoice shall include the ticket issued itself. So that if the ticket that is issued by airlines or the railways, that itself includes all the relevant details, then they need not issue a special document, but that ticket itself will be considered or deemed to be a tax invoice. Your basically that tickets need not be serially numbered again. However, there would be some specific identification number on them. Again, the recipient's address need not be captured, because since passengers are individuals and the GSTN of the organization, once that is captured, it is deemed to be sufficient. Again, here, please do not confuse with boarding pass and tickets. Boarding pass is something that will not contain, which is issued by the airlines, but separate tax invoice or tickets are issued by the airlines now, which can function as tax invoice itself. So basis those tickets tax invoice, we can now claim the credit of the transaction for transportation services. Next special case that we are going to quickly discuss is that of multiplexes. So obviously multiplexes do not include single screens within the ambit. So for the tickets that are issued for admission to movies, the GST law mandates that only electronic tickets has to be issued. Paper, so basically those tickets in paper form where the seat number would be either mentioned by pen or something, those details are no longer permitted for multiplexes. They only have to issue electronic tickets. That electronic ticket will be deemed to be tax invoice, and such a tax invoice need not contain details of the recipient altogether. However, all other things have to be mentioned. All of this is covered by Rule 54, Sub-Rule 4A. In case of single screen owners, whether they want to follow this or not, that option is given to them itself. So they may opt to follow this, they may not opt to follow. However, it is mandatory for multiplexes to follow this. Next aspect is that of revised tax invoice. This is a special case wherein, say for example, when you apply for a fresh registration and you mention that your application date is 10th June and it takes some 4-5 days, 10 days for registration certificate to be received. Say it is received on 22nd June. And since your threshold had crossed on 10th June itself, in the application you had mentioned your date of effective registration should be 10th June, and the officer also grants the same. So for the period from 10th June to 22nd June, you can issue revised tax invoice for the supplies made during that period, and you can collect tax from your customers. Also, you can claim credit for invoices that are issued to you after 10th June. So when you apply for a fresh registration and the effective date of registration is earlier than the registration certificate date, in that case, for the intermediary period, you can actually issue revised tax invoice, collect tax from your customers, and discharge your liability. However, what we've seen is in our limited experience that of late the officers do not give a registration date which is effective from a prior date. Generally, the effective date and the issuance date has been the same itself, even though we mentioned that the date of application or the date on which threshold is crossed is an earlier date. So section 31(3)(a) and rule 53(1) discusses this concept of revised tax invoice. What are the mandatory fields to be mentioned in revised tax invoice is more or less it is the same. However, one special detail, that is the number and date of the corresponding bill of supply that would have been issued, that also needs to be mentioned in the revised tax invoice, which is issued for the intermediary period. Rest all details more or less are very similar. Again, here, however, if you see that the department or the rules do not permit invoice without a signature or DSE. In case of tax invoice, there was some relaxation. However, in case of revised tax invoice, there is no such relaxation for not affixing signature or digital signature. That has to be mandatorily required in case of revised tax invoice. Once we've covered the taxable aspects of tax invoice, we shall now move on to other documents, bill of supply and other vouchers that we will discuss in the same fashion as we discussed the tax invoices. The first one is bill of supply. So section 31(3) subsection 6 and rule 49 govern the issuance of bill of supply. Bill of supply can be issued by any registered person under GST who is supplying exempt goods or services only, and it can be issued by composition taxpayers who are paying tax under section 10. So basically, bill of supply cannot include taxable supplies, and as a corollary, it cannot have taxes in the bill of supply in any circumstances. We now move on to what are the mandatory fields. So obviously the portion from the tax invoice which discussed tax, tax rate, taxable value, all of those are excluded. What we now have is supplier legal name, GST and address. The header has to be compulsorily bill of supply. The document number, again the same logic as it was for tax invoice. The date of issue, buyer's legal name, buyer's GSTIN, buyer's address, invoice item details, value of supply, and finally signature or affixing your digital signature. Again, here that relaxation which we discussed for tax invoice is applicable. The next is again a special case which talks about invoice come bill of supply. This is a very unique exception that has been carved out in the GST regime. What it talks about is only in case of B2CS supplies, a registered taxable person who supplies exempt goods as well as taxable goods or services, he can issue a single document only and only if the recipient is not going to claim the ITC of the supplies which are made by the taxable person. In that case, he can issue a common document which will wherein the header will be invoice come bill of supply. All the contents of tax invoice and bill of supply which we discussed have to be a part of this document of invoice come bill of supply. However, creating such a document poses more challenges than the benefit of relaxation that is provided, because the amount of exception reports that need to be carved out in such cases would be a lot for the system, very limited applicability, and to be very frank, it would only be in the cases of probably those huge shopping arcades wherein everything is supplied together, wherein you get a single invoice wherein all the items are entered, and in such case those are basically going to be used for your home consumptions. In those cases, generally they issue invoice come bill of supply, because it would be practically difficult to segregate which is taxable, which is exempt for such a huge inventory which is available with them. So in those cases, they generally follow wherein a single document is issued by them. The next voucher that we are going to discuss is the receipt voucher. Basically, every registered person under GST who receives advance payments in relation to goods or services, they need to issue a receipt voucher to the recipient. The recipient may or may not be registered under GST, but the section 31(3)(d) and rule 50 requires you to issue a receipt voucher. So if at the time of receiving an advance, you are not aware what will be the rate of tax, then government says you need to pay at 18%. And again, if you don't know whether it is going to be a local supply or an interstate supply, then the government also says that you pay considering this transaction as interstate supply. Moving on, the receipt vouchers will have the same details again. Again, the same voucher number, which has to be serially numbered, alphanumeric, unique, the supplier details, buyer details. One special requirement would obviously be the amount of advance that you are receiving, the rate of tax, and what is the tax amount on this, which is going to be paid, the place of supply, the description of supply, lastly, signature and digital signature. Again, here the relaxation is not provided with respect to not mentioning of the signatures. Refund vouchers. So basically, it is exactly the opposite of the receipt voucher. So when you actually received an advance, however, after receiving the advance, you were not able to provide services, or the contract got cancelled, or for whatever reason, there was no supply and no tax invoice was issued. For when you return such payment, you are required to issue a refund voucher, which evidences that no supply was made against the receipt of payment which was done. Again, your recipient may or may not be registered under GST, but you are required to follow these provisions if applicable to you. Here, one additional or special requirement that needs to be covered is that what was the number and date of the corresponding receipt voucher for which such refund voucher is issued. That has to be specifically mentioned. Also, the header has to be refund voucher, and all the other details remain the same as that of the receipt voucher. The next voucher is the payment voucher. Section 31(3)(g) and Rule 52 govern the provisions for payment voucher. So every registered person under GST who makes a payment to a supplier and the underlying supply is liable to tax under reverse charge mechanism, the underlying supply can be listed as RCM transaction by a specified notification under section 9(3) or supply from unregistered persons. Currently, as you all know, unregistered person RCM applicability is currently on hold. So in all other cases, when you are receiving any transaction for which tax is liable to be paid under reverse charge by the supplier themselves, in those cases, you are required to issue a payment voucher at the time of making payment to such suppliers. So what is the format? So again, all the same details with the header specifically saying payment voucher, supplier details, voucher numbers, date of issue, recipient details, amount paid is specific to payment voucher, description of supply, what is the rate of tax. So what is the tax payable on reverse charge, that needs to be mentioned, because payment voucher will be issued in those cases only wherein the tax is payable under reverse charge, place of supply, and lastly the signature or the digital signature needs to be affixed. The next section that we are going to discuss is that of debit notes, credit notes, and delivery challans. Debit note and credit note have the same provisions governing them, section 34 and rule 53(1)(a). So any person who has issued a tax invoice, only they can issue a debit note or a credit note in reference to those tax invoices only. So in what cases can you issue a credit note? The first case is that of tax or your taxable value exceeded the actual supply. So you actually issued an invoice for 1 lakh rupees. However, the actual supply was made only to the extent of 85,000. So for that balance 15,000, you can issue a credit note. whatever goods that were supplied, those have been returned partially or entirely. In those cases, you can issue a credit note. In cases where goods and services have been supplied, but there has been renegotiation because there was some issues found with the goods or services that are supplied. So in those cases, credit note can be issued by the supplier. Debit note obviously can be issued in those cases where earlier when you had issued the invoice for XYZ amount, the end supply was a higher value. So for the differential which is pending to be invoiced, you can either issue a fresh tax invoice or you can issue a debit note. Here, what we specifically need to take care is that whenever we issue the debit note or a credit note, you can issue for multiple tax invoices via a single debit note or a credit note, but the such debit note or credit note has to be issued for multiple tax invoices pertaining to the same financial year. So you cannot have 5 tax invoices of FY 22-23, 5 invoices of FY 21-22, and a single credit note for these transactions. In those cases, you would be expected to raise 2 different credit notes for each set of tax invoices belonging to a particular financial year. Here again, while discussing the mandatory fields, the header obviously has to be either debit note in case of debit notes or credit note in case of credit notes. Supplier's detail, the document number, again the same condition as that was the case for tax invoices. The date of issue, what is the nature of the document, whether it is debit note or credit note, recipient's legal name, recipient details, the number and date of corresponding tax invoice or invoices for which the document is being issued, that needs to be mentioned. Lastly, you also need to mention the value of taxable supply rate tax for which the debit note or the credit note is being issued. And finally, the signature or digital signature on the invoices. The next aspect is the delivery challan. As we all know, delivery challan is required to be generated in case where goods are transported. So in those cases, for the moment, you can issue a delivery challan when the tax invoice is not generated. In case tax invoice is generated, you can move the goods on the basis of tax invoice. But in those cases where tax invoice is actually not generated, in those cases, you are expected to generate a delivery challan, which is provided in Rule 55. So, for example, goods are sent for job work, which are going to be returned after the work that is done. So, in those cases, there is no supply, but there is movement. Hence, you are expected to generate a delivery challan. In cases where you are sending goods to the same branch within the same state, in those cases as well, there is no taxable supply. Hence, there will not be a tax invoice, but there will be a delivery challan for movement of goods. So, as we all discussed, this delivery challan will be issued in place of tax invoice at the time of removal of goods for transportation itself. And like tax invoice, it will also be generated in triplicate copies. The mandatory fields for delivery challan obviously include the header, which will be delivery challan, supplier details, the challan number, which have to be serially numbered, alphanumeric, unique for each financial year, the date of issue, consignee's details, consignee's address, consignee's GST IN, description of the goods, taxable value, rate of tax and tax, place of supply in case of interstate transactions, and signature, which is required in case of delivery challans. Here they have not mentioned digital signature. Here they expect you to affix a signature only, something which is a unique, because probably all delivery challans, when they are printed, the law expects them to be physically signed only. So for all the documents that we all discussed in this first set of documents, in those cases, what the law says is that as far as the supplier is concerned, what are the consequences of non-compliance? So the first case is that of penalty of 10,000 or the amount of tax involved, whichever is greater, in the case where goods or services are supplied without issuing an invoice, or the invoice that is issued is incorrect, or there are false details mentioned on such invoices. So the penalty is 10,000 or the tax involved, whichever is higher. On the recipient side, obviously, they will not be able to claim the ITC if there is actually no invoice or the invoice is incorrect. In case of documents that do not involve tax, there is one argument which says that there is no guilty mind to that, there is no mens rea, hence there should not be any penalty also. And in other cases wherein the minor breaches are involved, the minor breaches which can be corrected, or it is a very minute omission, in those cases the law provides an exception wherein it says that penalty shall not be attracted if such mistakes or omissions are easily rectified and there is no fraudulent intention with respect to such minor breaches. So in those cases, there might not be a penalty. Now, moving on to the next set of documents that we will discuss. Actually, it is not a set of documents that we are going to discuss. It is basically the manner of issuing invoices for a specific set of registered taxable persons under GST. So what is basically e-invoice? So when e-invoice was introduced, what the government said was, for certain B2B and export invoices, the details of those invoices would be authenticated electronically by the GST portal, which will be further used by the taxable person. So what will basically happen is, e-invoice require certain basic fields of an invoice which need to be pushed or sent to the invoice registration portal, which is maintained by the government themselves. They will just authenticate whether all the details are correct in the proper formats. They do not question whether the transaction is right or wrong. They will just authenticate the information that is received by them, and in return they give a QR code and a 64-digit invoice reference number, and that QR code and IRN number 64-digit has to be mentioned on your e-invoice documents. So when a recipient receives a tax invoice which is e-invoice complied, in those cases they can scan that QR code and they themselves will be able to directly see the details of the invoice which has been pushed by the registered person to the government and which is mentioned in the tax invoice itself. So here what is going to happen is, basically the details of your invoice will reach the government first before they reach to your recipient. So as a result, the transactions in the hands of the recipient, they are more relaxed, and they know that this transaction has now been reported to the government before it has reached them. So the compliance burden now shifts majorly on the shoulders of the supplier only, that he has to now file his returns and pay the taxes on time because the invoice details are already reported to the government. So how was this e-invoice implemented? Basically what the government did was, they introduced e-invoice in a phase-wise manner, wherein on 1st October 2020, they said the entities which have a turnover greater than 500 crores, for them e-invoice is going to be applicable. After 3-4 months, they said only entities with turnover greater than 100 crores, for them e-invoice will be applicable. 3 months further down the line, they said, or entities having turnover greater than 50 crores, For all those entities, e-invoice provisions is going to be applicable. And recently, on 1st April 2022, they said all entities having a turnover greater than 20 crores, they need to generate e-invoice for their B2B and B2G. B2G is basically business to government supplies. And the details of such invoice have to be mandatorily reported on the IRP portal, and the e-invoice details have to be mandatorily generated. So this portion of e-invoice is applicable in case of B2B, B2G export transactions. In case of B2C transactions, there are certain different set of e-invoice rules that are applicable, but currently they are operational only for entities having turnover greater than 500 crores only. So what is the difference between B2B and B2C e-invoicing? So in case of B2B e-invoicing, the government portal generates 64-digit IRN and a QR code which is static. Here, the objective for generation of B2B invoice is compliance and reconciliation, and this is generated only from the portal which is maintained by the government. In case of B2C, as you can see, it is a dynamic QR code. Further, it is only provided so that the smaller customers, the B2C customers, can make online payment using that QR code. Here, the details of B2C are not required to be pushed to the government portal. Such large entities can themselves generate this dynamic QR code by themselves and affix them on their invoices which are issued to B2C customers. Next, this is a small gist of the applicability for what type of transactions, what is applicable, provided the entity's turnover is greater than 20 crores. So in case of B2B invoices, which include your branch transfer invoices, it is mandatory to generate IRN and QR code. For debit notes and credit notes, again, IRN and QR code is mandatory. For export invoices, again, IRN and QR code is mandatory. B2G customers, business to government. So some government entities do not have a GST number, but they have GST TDS number. So basis that GST TDS number also, you are expected to generate e-invoice which will contain IRN and QR code. For B2C, as we discussed, dynamic QR code only for entities greater than 500 crores. Bill of supply not required because there is no tax involved. In case of outward RCM transaction, yes, IRN and QR code is applicable. For self invoice that is generated in cases where the transaction is for inward RCM, again there is no applicability as that of bill of supply. So I hope the applicability and various transactions which are covered are clear to everybody. What are the mandatory details which are required to be pushed to the invoice registration portal, basis on which your the government issues a QR code and the IRN. So invoice type code, whether it is B2B, SEZ, export, invoice number, invoice date, supplier's legal name, GST IN details, supplier's address, supplier's state and PIN code, same details for buyer along with state details and PIN code, dispatch from details, ship to details, invoice level details, HSN rate, and the rest of the details of total is all calculated by the system themselves. So once all of these details are captured in the system, from the back end, these details are pushed to the government department in a JSON format, and the government in return gives you a JSON format document which will then be imported in your system, which converts that JSON into a PDF and which will contain all of these details along with the QR code and the IRN, the 64-digit IRN. So how does this 64-digit IRN actually look? So what the government has done is, basis the 4 fields, namely the supplier GST IN, the financial year, the document type and the document number, it runs an algorithm at the back end and generates a specific IRN which is unique to these four parameters only. So even if you change one parameter, the entire number 64 digit will change and it will not be similar at all. So basis these four parameters, a unique IRN is generated for each document. So what are the consequences of non-compliance of e-invoice? So in this case, the invoices that are issued will not be treated as valid invoice for those suppliers where e-invoice issuing is mandatory. So in case your turnover is greater than 20 crores, yet you are not complying with the law, then all the invoices that you have issued will not be treated as a valid tax invoice in the eyes of the law. Again, penalty for incorrect invoicing in such cases as high as 25,000 per instance. With respect to the recipient side, one school of thought is that the eligibility of ITC may be questioned because in the hands of supplier, it is not treated as a valid tax invoice itself. So as you can see, the intention of the government is very compliance mandatory style, wherein they expect everybody who is covered under the net of having turnover greater than 20 crores, they are compulsorily expected to generate e-invoice, because the consequence of non-compliance of e-invoice is very high and it could actually disrupt the business for a very long time. So as a recipient, what you can do is you can obviously you would not know your supplier's turnover and all the other details. So you can ask your supplier to share a declaration wherein it would state that currently their turnover is not greater than 20 crores. And as soon as the said turnover crosses 20 crores, they will comply with the e-invoice provisions. Maybe you can also add a clause to say that if any loss is incurred because of supplier's non-compliance, that will not be borne by the recipient. So such declarations are currently being expected from smaller suppliers by the larger organizations who have already started complying with the e-invoice provisions. The last aspect that we are going to discuss today is that of e-way bill. E-way bill started much before the e-invoices came in. Again, the purpose of having a nationwide central e-way bill portal was to track movement of goods and ensure that that whenever goods are issued, goods are supplied, they move along with a e-way bill, and that is somewhere or the other captured, and the transactions are all genuine after the movement of goods has been established. So what are the basic details or the provisions that are governed? So first, rule 138 discusses the provisions of e-way bill. It is applicable to every person who causes movement of goods. So e-way bill is mandatory for movement of goods and not supply of goods. It is very important to distinguish that there could be a case where it is not a supply, but there is movement, and hence e-way bill would be required even though tax invoice is not required to be generated. So what are the conditions? The first condition is that the consignment value should exceed 50,000. If it is below, then you need not generate e-way bill. As we discussed, it could be in relation to a supply, or even when there is no supply but there is movement, you are expected to generate an e-way bill. Only in the case when it is a case of job worker and handicraft goods, there is no limit of consignment value. For all interstate movement for job work and handicraft goods have to be covered by e-way bill only, without any consignment value limit. So when is the e-way bill required to be generated? So it is required to be generated before the movement commences for goods, and only when you fill up part A and part B, both of the form EWB01, only then a valid e-way bill will be generated. It has to be generated for the modes of transport of road, air, and sea. Generally, modifications are not allowed after generation, except in the case where the mode of transportation is changing, say for example from road to sea, vice versa, or there is a motor vehicle breakdown and a new truck or a new vehicle is going to transport the said goods. Cancellation is again very restrictive, and it is permitted only within the first 24 hours of generation and not after that. So once you have generated, you have to ensure that the movement of the goods begin as soon as possible, because every e-way bill that is issued has a validity. What is the validity? Say for normal vehicles, it is per day they have to cover a distance of 200 kilometers at least, and for every 200 kilometer part thereof, there will be one additional day. So in case where the goods are supposed, say they have to travel 500 kilometers, so in that case the limit will be 3 days only. For over dimensional cargos, which are basically huge trucks which have probably a huge number of weight that is carried, and their speed is generally very slow, for them the limit is, for every 20 kilometers the limit is 1 day, and every 20 kilometer part thereof it is an additional day. So if it has to travel say 50 kilometers, the validity will be 3 days only in case of over dimensional cargos. The next aspect that we are going to discuss is what type of documents will be generated for what type of transactions. So here, as we can see, the movement of goods for consumption services, you can select the option outward others, and the document will be delivery challan. In case where movement is for rental of goods, at that time also you can select outward option, others sub option, and movement can be made using a delivery challan. In case of exports, you have to use tax invoice only. In case of job work, there is a special option for outward job work, and using delivery challan, the goods can be moved. For exhibition fairs, there is a special again reason that is provided, and the goods can be moved on the basis of a delivery challan. Lastly, we have sales return and imports. In both, in case of sales return, you can move the goods on the basis of credit note, and in case of imports, you can move the goods on the basis of your bill of entry from the port to your warehouse or wherever is your destination. Lastly, discussing about the consequence of non-issuance of e-way bill is basically that when so if you are a taxable person who was required to generate an e-way bill, but you did not generate an e-way bill, and the goods were moving without specified documents, then the liability is that of 10,000 or tax that is sought to be evaded, whichever is higher. So if your goods are of the value of say 10 lakhs and the amount of tax involved is 1,80,000, then the penalty would be such high for non-generation of e-way bills. Also, under section 129, there is a possibility that your vehicle may be seized along with the goods, and that will entail separate penalties for release of the goods. Again, in those cases, it might be your business may be disrupted, because the movement will be immediately stopped, and the goods might not reach the destination on their designated time, or whatever the time they were supposed to reach. It could actually hamper the business, and hence it is very important to ensure that the tax invoice or the delivery challan, whichever document that is accompanying the e-way bill, have to be on the same lines correctly issued. All the details which are mentioned in tax invoice are correctly captured in the e-way bill. The distance, the ship to, the bill to, the ship from, the destination, all of these details as mentioned in the tax invoice have to be correctly mapped in the e-invoice, so that if at all the goods are verified while they are being transported, there is no issue, or the goods are not detained or seized along with the conveyance at the time of such transportation. And with that, I think we've covered whatever we intended to cover, and also we've come to the close of this session. I hope it was enriching for everyone. You were able to extract some new details, some new aspects which you were not aware, and or which were not being followed, and moving forward the same can be correctly captured as required. Thank you so very much. In case if there are any questions, we can take them up. I would ask if anybody has one, we can take them up. You can put it in your chats as well if there are. Okay, I think none. So thank you so much, everyone. It was a pleasure hosting you guys. And okay, we have something that has come up. Okay, yeah, thank you so much, sir. And yes, next week we'll be back with the next session. Hope to see you all again. Thank you very much. Have a great day. Thank you.